And Vodacom has reported a marginal rise in annual earnings. South Africa's biggest mobile operator has reported a 1.3% increase in full-year headline earnings per share. That's as the group benefited from a stronger second-half performance, but those gains were capped by significant currency volatility. A final dividend of R3.35. This takes the total payout for the year to R6.20, which is a 5% increase on last year's figure. Now joining us for a closer look at Vodacom's performance is company CEO Shameel Joosub. Shameel, thanks so much for your time this afternoon. So currency fluctuations continue to weigh on the group, but we are seeing some growth coming through. As mentioned, HEPS rising 1.3% during the period. As we get started, just help us make sense of these numbers and how the company has fared over the annual period.
Thank you, and thank you for having me on the show. I think, we've been through a lot of currency volatilities, of course, the devaluation in Egypt in March last year, and then a devaluation in Ethiopia in July. So that did have a overhang onto the numbers, but I think we're well poised to grow going forward. Of course, it did affect the reported earnings, but I think as we look into the next phase, and we look at the normalized growth at around about 11% in revenue and 7.8% in EBITDA, it bodes well for the future, and that's why we're feeling a lot more confident in upgrading guidance to double-digit growth in both service revenue and EBITDA from now until 2030. And we're giving out clear guidance that we'll grow customers to 260 million by 2030, and financial services customers from 88 million today to 120 million customers as underpins of that growth trajectory.
And Shameel, you've pointed out Egypt and Tanzania as some of the markets where you've seen really good growth. Just walk me through the performances in those markets.
So we've seen strong growth in Egypt, 49% growth in revenue, 99% growth in net profit. Very, very strong performance despite the devaluations. And that's come broadly from customers using data and also content services that we sell, but also financial services growing 80% in that market, and strong growth in enterprise as well. So I would say, basically covering every sector of the business, we've seen strong growth and been able to maintain and grow our market leadership position. Then we've seen strong growth in Kenya, of course, as market leader. Safaricom has performed really well. And then Ethiopia is also is coming of age. Customers grew 103% to 8.8 million customers. And revenues grew by 239%. So, again, despite the devaluation there. So we've seen, a good traction, growing the business almost 9 to 10% every month. So, very positive. Tanzania has been very strong with just over 20% growth. DRC has grown well despite some once-off challenges, but it's grown 8% in dollars in what's now a $715 million a year business. So yeah, we've seen good growth everywhere. Some pressures in Mozambique from repricing, so which dampened the result from that country. And then South Africa was a bit muted because we repriced some of our wholesale contracts. But overall, I think very, very, very strong, and gives us confidence for the next horizon.
Now, the group is really looking to, diversify its revenue streams. Talk to me about how that's been going, particularly in the financial services growth on that front in the double digits.
Yes, very much so. So, we're now processing $450 billion of transactions across the continent in fintech. So strong growth in customers to 88 million. The actual growth up 23% in the number of transactions. So, really seeing traction across all markets from Cape to Cairo. So, I think we've seen all our markets growing quite nicely in the fintech space. Slight nuances, differences. South Africa, very strong growth on insurance. Egypt, very good growth on still, the basic person-to-person money transfers. Safaricom picking up nicely on investments now, and Tanzania, growing quite nicely merchant. So we're trying to make sure that all markets are performing on all products equally successful, and that will help to propel the growth going forward as well.
And Shameel, the massive deal really stealing headlines over the past few months. Vodacom, of course, appealing the Competition Tribunal's decision to block the deal. We got that report, I think, at the end of March, and experts there saying the deal's benefits are temporary and don't outweigh the negative impact on competition. Talk to me about where you're at with that. Is it just a wait-and-see game until you head to court?
Yes, I think, having gone to the Competition Tribunal and, doing a remedies document, having addressed everybody's concerns, we felt that, the result that came out was very disappointing, and that's why we're appealing it. We think more, because, we have enough investment opportunities across our markets. But, being passionate about South Africa, we think it could be transformational for South Africa. And we joined in that by government through the Department of Trade and Industry, who will also be appealing the decision with us. Because, this deal would have created 10,000 new jobs, covered 1 million rural homes. So there was a number of extractions that government had made sure they were part of the deal. And so, that's why it was disappointing. So, yes, we now wait and see what will happen at the appeals court.
And Vision 2025 coming to a close, Shameel, just take us through the strategic efforts over the past year and how that fits into now Vision 2030.
Well, back in 2020, we were looking at our revenues and how do we diversify. So essentially, we were sitting at about 91 billion of revenues, and today we're doing 152 billion. And that's come from the diversification, of course, Egypt playing a big role in that geographical diversification, which I think Ethiopia will contribute meaningfully into the next couple of years. And then, of course, from a customer perspective, we were at 115 million at the time, and we're now at 211 million customers. So, I think that diversification, both in geography and product, has really borne dividends for us. And that's why we feel confident about, putting out the upgraded guidance underpinned by, growing customers by almost 10 million a year to 260 million customers for the next 5 years. And then also on the fintech customers, being able to grow by at least 6 million a year so that we can get to 120 million customers.
And before I let you go, Shameel, where will you be investing more of your money? Where's the share of CapEx going in the next financial year?
So it's going across the portfolio, of course. Like this last year, 11.6 billion in South Africa. We'll see a step up of more CapEx in South Africa of the 20 billion that we're investing, of course, then Egypt. And then, of course, investment into all our markets, and putting in the requisite capex investment to first and foremost make sure that we providing the right level of network quality as customers continue to spend more, but also to grow the utilization of network on data.
Shameel, thanks so much for your time and taking us through the year that was for Vodacom. That was Vodacom CEO Shameel Joosub.